Welcome back, everyone. You are watching Central Valley Today, and we are talking about mortgage loan limits. They're changing for the coming year. Is a change in order for your household? Well, let's find out from Monique Runge from American Financial Network, here to tell us more about what's going on. Monique, thank you for being here.
Yeah, my pleasure. Happy holidays.
You too. You look fantastic, by the way.
Thanks.
Very festive. Let's start by talking about the economic stimulus and how it is affecting home buyers. Now, things are changing.
Right. Well, essentially what has happened that is really going to impact the market the most is HUD has announced that they're going to lower the minimum or lower the maximum loan limits for first-time home buyers.
What does this mean? What does this mean
for example, in Fresno County, you could be a first-time home buyer.
Okay.
Or anywhere, actually. Let me back up. So throughout the nation, you can be a first-time home buyer with a 3.5% minimum down payment. Okay. Now, every county nationwide has a maximum loan limit, right? Okay. They won't let you just go to any level.
Yeah.
So those loan limits, which for Fresno County, for example, or throughout the Central Valley, have kind of been in the $371,000, $381,000 level. Now what's happening is everything's coming down pretty close to about $100,000 less nationwide, county by county by county. So
now we have less buying power.
Correct. You've got a lot less buying power, $100,000 less buying power. So that is really going to impact our market here in the Central Valley because so many people are becoming born-again home buyers again, you know, because they've lost their home maybe for one reason. And they've been buying all these beautiful new homes all of our builders are providing throughout the Central Valley, and they're at a price point of $350,000 and above. So it's going to push them right out of that market.
Oh, no.
Yeah, but we've got some great alternatives that we're going to talk about today.
Yeah, let's do that. Let's talk about those alternatives first of all, and then we'll go into the purchase scenario, because you always give us these great scenarios to give you a great visual and idea of what she can do for you.
Do we have the graphic for the county loan limits?
The county loan limits, I'm sure we do, the county loan limits. So Fresno County is different than Kern County. If you get 1, 2, 3, or 4 units, it's right there on your screen. What does that mean exactly?
Well, what it means is that you can buy anywhere between a 1-unit to a 4-unit property utilizing, you know, these types of loan programs, okay? So what it just means is that for Fresno, Kern, Kings, Madera, Merced, Stanislaus County, all of these counties are essentially going to be lowered by about $100,000 on average to their maximum first-time home buyer loan limits.
Wow. Yeah. What kind of reaction are you getting from
Well, what I'm doing right now is I'm reaching out to all my clients in my database that I know want to buy first quarter next year. And I'm getting them out there now, right? Because if I'm going to get at least a half a dozen of them in contract before December 31st, when all of these changes go into play, because they all come into play January 1.
So what mortgage options are available with a minimum down payment and a purchase price above, let's say, $290,000?
Right, exactly. So what's going to be the best option is to do a conventional loan. So instead of a 3.5% down payment, you're going to be targeting more for a 5% down payment. Okay. Credit scores are going to be required to be higher. I mean, there's a whole big process. So I think what's important here is, you know, for everybody, meet with a licensed mortgage professional like myself. Do a complete financial analysis. You know, let's review credit, because credit scores on conventional loans have a high impact. And then we also want to work on saving the additional monies for the 5% down payment, and then also keep debt-to-income ratios low, especially coming out of Christmas. I know it's hard for people.
It is hard. Okay, let's talk about this purchase scenario that you've given us. You have an owner-occupied purchase of 1 unit with a 680 FICO score.
Correct.
95% loan to value, 30-year fixed rate. Talk to us about this.
Okay, so this is a classic mortgage. So it's based upon, this scenario is based upon a purchase price of $350,000. Okay, so it's much higher. So when you go in with a 95% loan, you've got a loan for $332,500.
Okay.
And so the monthly payment is going to vary depending upon whether you use borrower-paid mortgage insurance, lender-paid mortgage insurance, or if you do ultimately opt for a government loan. And so what we've got is a comparison between the 3 different loan scenarios, which really ultimately, if a homeowner or future homeowner can save the 5%, it is so much in their best interest, because they're going to save several $100s a month on their payment. And I think that's what's just most important to understand is let's just get everyone educated, let's get them on the phone, let's start those conversations and start planting those seeds for next year.
And a lot of this seems a bit intimidating for people, especially if they think they can do it on their own. It's best to call Monique 250-0313. As you can tell, she knows what she's talking about, and she can help you and pretty much do all the footwork. I'm going to put you to work with all our viewers.
And I'm working all throughout Christmas, so don't be afraid to call.
Because December 31st is
the deadline.
Okay, definitely call her now, and she'll drum up a wonderful financial analysis for you and get you in that home of your dreams.
Yeah, I'm making a lot of people some great Christmas presents.
Oh, good. What a great feeling. What a great feeling.
It is. It feels wonderful.
Monique, thank you so much for being here.
My pleasure.
Appreciate it.